Hi everybody, my name is Neil Harris and I am part of Project Inclusion at the Payments Association, where we collaborate with the industry, government, regulators and the third sector bodies to provide clarity on innovation and solutions in payments that can reduce financial exclusion and the poverty premium. Today we are focusing in on the cost of living crisis, and we're delighted to be joined by John Downie, who's the CEO of SteadyPay, a fintech and credit provider who supports the gig economy workers and those people who have irregular income. So with that, let me hand over to John to introduce himself and explain what SteadyPay is all about. Hi, John. Thanks for joining us.
Hey, Neil. Thank you. Great to be here and chat with you today. So from a SteadyPay perspective, I'm the CEO and founder, and we provide a range of innovative, now embeddable finance products that allow customers to offer credit to their customers much earlier than they normally would be able to. And we call this approach fast track to credit, where we control the whole ecosystem and can guarantee credit to an individual or a business within a very short period of time, potentially despite no previous credit history. And we have quite a cool suite of products. You touched on some of them already: income smoothing, quick cash, and others that help out these normally excluded people.
Fantastic, mate. So, in the context of cost of living crisis, what does that mean for you and your organization?
So for us, I mean, when we started up over 4 years ago, our mission was to improve the lives of those underserved by traditional players. So for us, the cost of living crisis really serves as a strong reminder of our motivation, which is, we're here to change the lives of everyday businesses and workers for the better, and work with other players in the industry to try and make that happen.
Fantastic. And so in terms of a little bit sort of more detail in terms of you've spoken about traditional players and how they play a role, and still they've played a role historically, but still play a role today in a big way. How does your organization see that, and how have you responded to the change that clearly needs to happen?
So I think for us, what we already know that this is an underserved space, with immigrants, young people, hardworking, blue collar workers that have seen like a lack of response from traditional players and government, which we can talk to, and the banks themselves, or in the traditional player space, really don't know what to do. They'll do a bit of signposting, they'll provide some generic advice, they'll provide some budget calculators, but it's very much a lip service exercise. It's not their fault. Actually, that's all they've got in their current kit bag of solutions. So for us, when we saw that tightening of credit criteria, the need for simple solutions to give access to real money or to actually improve your credit score, instead of waiting or building some tiny component of one, we thought actually what people need is that not promises or advice, but a real path with real guaranteed steps of how to get there. And then we also realized that it has to be where people need it. So this is probably the other big realization for us, which is embedded in the experience that they're used to being in. So whether that's their everyday banking app, or some frequently used software platform, that's where they should be being able to access the tools to actually try and make their life easier or better.
100%. And so around that UX engagement aspect and how things are actually changing, is there any specific thing that needs to happen for things to sort of improve further?
So I think that there's lots of things I think need to happen for things to improve further. I mean, we can talk specifically about UX, the UX or the user experience side of things in more detail in a second. But I think when we think about improving things further, for us, we believe that small businesses, who employ over 60% of private workers in the UK, are the driving force of the economy. So those improvements can only come from enabling those who drive our economy. So helping businesses with cash flow, or helping individuals earn consistent income or reduce the cost of credit. We're doing our small bit, and then it's working across the wider ecosystem to help everybody do their little bit. So if we're thinking about the fintech ecosystem, we believe that the ecosystem itself is stronger together. So for example, when you add an open banking player or a banking as a service or a BaaS player and a lending player together, you have a very attractive offering that can help solve a lot of real cost of living problems with right fit solutions, as opposed to little isolated stovepipes. So I guess in that scenario, being able to freelance with a stable income sounds great, or being able to send money abroad without worrying about timing of NX pay. Those things are sort of the types of interesting solutions you can get when you pull those multiple players together. And then from a regulation and a government standpoint, they're part of the ecosystem too, and they can do a lot more to help drive the economy out of the doldrums. Whether that's from the area of helping startups, so R&D, EIS, British Business Bank, Future Fund, all in themselves actually quite good things. But Future Fund coming to an end, need to revamp that up. R&D tightening of criteria as opposed to expanding of criteria to support driving innovation. So reduce the restrictions. EAS is one area they have at least expanded the limits on. So there are some areas that are heading the right way, but there's others that you really need to try to identify those enablers in the industry and be able to sort of push a sort of a tailwind behind them, as opposed to push regulatory barriers in their way. And I guess coming back to your user experience thing, it comes back to that. For our we saw this from our own customers. If they could press a big green "do it for me" button, that they would. So how do you make it as easy as possible, as automated as possible, and as seamless as possible for those people to be able to get on with their normal lives? And that's the thing to remember, is a lot of the time people aren't looking, they're looking to try and get on with things. And if they can find things that enable them to be able to do it relatively quickly, that's a big win. So it's what we should be here for. It's what the regulators should be here for. It's what the governments themselves should also be here for, and that will actually help us not only get out of a recession, but start driving forward out of that cost of living crisis as well.
Fantastic. I couldn't agree more. And just to give us a kind of a flavour of the size of the market, do you have anything that you can share with us, just to give us a bit of context in terms of how many gig economy workers are there? How what is the size of of that particular market, of those individuals who are affected?
Yeah, sure. So I mean, if we're talking about, and I think it's something it's worth thinking of as we sort of build out the whole market and building blocks. For traditional definition of gig economy workers that are working on freelancing and gig platforms, you're talking about 4 million workers in the UK. So not an insignificant number. Then you start to add on, okay, what about people who are on 0-hour contracts? Add almost another couple of million. So you're sitting at about 6 million there. Then, what about people that are on part-time or other reduced hours contracts, or some level of shift or freelancing and contracting work? And you're suddenly past 10 million workers. So you're almost at half the UK workforce by this stage that are impacted by the challenges of that irregular income. So for us, we have people everywhere from hospitality, retail, grocery, even the British Army are impacted by this problem, believe it or not.
Wow, I mean, sounds like it's a huge market, and there's still major need. Despite the traditional players having played a role historically, there's still major gaps, and especially as you mentioned, the 0-hour contracts, new things, new ways of working are coming into force. Clearly the regulation and the providers need to catch up. So what does, in your view, what does this space look like in 5 years' time?
So I think in 5 years for us, I see the traditional banks operating more like a production company or an aggregator, with their services being made up of many fintechs operating mostly invisibly behind the scenes. So you get that already a little bit with some KYC providers and other things, but I actually think think of it as an orchestration of a lot more moving pieces that services that they just couldn't provide themselves, didn't have the technology to underwrite, or don't have the risk appetite, or whatever it is. It doesn't really matter. But actually, orchestrating all of those pieces together into that sort of seamless user experience is one of the things I think we'll see with the very successful financial services players going forward. The other thing that we'll start to see is, and if we go to some specific areas, open banking will become more of a commodity. So too will wage advancing. In fact, the cost of both of those will trend to zero. Therefore, consolidation in the industry is inevitable. This is true across the space. We'll see many firms being acquired, combined into larger infrastructure players who are either looking for margin or differentiation. So the most successful in 5 years' time are going to be those that are customer-centric business models that are leveraging the best bits of everything. So it's back to that sort of orchestration play, a lot of which aren't yours directly. So, and yes, it will include generative AI. But I mean, I think we need to get over the hype cycle and think about the specific use cases of how that actually helps people and provides the advice or accelerates things or lowers the overall cost.
Fantastic. And I think that you touch on some really important points there around new technologies. AI is and generative AI in particular is a major driving force. It has major potential for the industry. So, are there learnings that we can look at, either different industries or different markets? What are other countries doing that we could potentially learn from?
Yes, I think definitely. So I think other countries are working through sort of I call it digitizing and getting ready. But if we start with sort of regulation, an example regulator, if we look at, say, Brazil, their regulator gets startups, gets innovation, and works very closely with the businesses to enable them safely. So it's not like hey, go for your life. It still needs to be regulated with the consumer or the businesses in mind. But they've done a great job of learning from other regulators and iterating fast. So that very startup mindset from a regulator is quite an interesting way to think about it. And then and maybe the Brazilian example, Nubank credit the regulator for being able to enable their sort of growth and success, et cetera. Interestingly, from a US perspective, they've got their own set of challenges. So I actually expect to see where now a lot of how it's working is innovation would start in the US and then be copied globally. What we'll see over time is that sort of switch that others actually copying a model of another country, whether that's Brazil or Spain or wherever it happens to be. But the more non-traditional players. And then I'd say cost of living specifically. We're seeing in governmental policy, we're seeing many other countries making a concerted effort to either, we've touched on some of the really enabling businesses, certain relief packages, but others are doing some of the basic stuff. Let's make public transport free. Spain's doing that, for example, cutting the VAT on energy bills. France has stopped charging for a TV license and capped rental increases at like 3.5%. So there's the policy level changes that are quite helpful. There's the regulation level changes that can help, and there's how do we enable those drivers of the economy, which I think we can help. And it's we can learn from what other countries are doing around the world to help make that happen.
Fantastic. Well, mate, it's been a delight to speak to you this afternoon. Thank you so much for spending the time. I found it really useful. I'm sure that others will as well. If people want to find out more about SteadyPay or yourself, what's the best way for them to connect with yourself or the organisation?
So pretty easy for us. So obviously, absolutely appreciate the talking today, because it's always great to talk about these things and how we're solving them. For us, they can always just jump onto our website, which is www.steadypay.co, so not .com.co. And I think most recruiters have my email address anyway, so feel free to drop me an email, which is just john.downie, DOWNIE @steadypay.co as well.
Perfect. Well, mate, thank you so much. It's been a really great session. See you next time. Thank you.
Awesome. Appreciate it. Thanks, Neil.